Welcome back. Still watching Business Morning on Sunrise Daily now. This weekend, the NNPC has been really busy responding to some reports. They say that, according to them, the Nigerian National Petroleum Company Limited is not indebted to international oil traders. They refute that report that says that they are owing about $6.8 billion, and also that they have not remitted to the Federation account. All of that is on the X handle. But one individual that seems to be in the middle of all of this and has responded to even their response is Calvin Emmanuel. Calvin Emmanuel is an economist and joins us this morning. Hi, Calvin. Good morning. Was all of this about with indebtedness and all of that? I mean, what Nigerians would really like to know is, does it have anything to do with the queues that we have? I don't know. I know you're in Abuja, and we know what we've heard, that the queues are also back in Abuja. I can tell you for certain it was a horrible weekend for a lot of Lagosians. A lot of people spent their weekend at the filling station trying to get petrol so that at least they can get to work this morning. A lot of people bursted going to churches or social gatherings. And even if you were able to get, then the queues causing traffic. Even this morning, I spent extra time to get to the office because of the petrol queues and nothing else. And we're hoping that by now they would have petrol from Dangote. But with all of this going on, it seems a lot of uncertainty surrounds it, as well as the Port Harcourt refinery. So a whole lot of things here, Kelvin. And I know you've been responding to what NNPCL have said about the issue of indebtedness and remittance to the national purse. But please, Nigerians just want to know why, why do we have, in the midst of plenty, we're still queuing and buying petrol at very high prices?
Good morning, Nini. Thank you so much for the privilege to be here. It's always good to be here on Business Morning. And it's quite unfortunate because our estimated monthly consumption of PMS is about 800,000 metric tons. The government, as NNPC has said, consumption is 70 million liters per day. And I've always said Nigeria doesn't consume more than 35 million liters per day. And if they doubt that, they should provide empirical data to back the claim that Nigeria produces more than 35 million liters per day. Now, what are the issues? Number one, you have a situation, for example, where you see in the last 12 months, importation of blended petrol from Malta spiked about $2 billion US. And now you have revelations of documents that shows that for 25% of the petrol consumed in Nigeria, there is a link with importation of off-spec adulterated petrol from Russia, from Russian refineries, that is sent and transshipped through blending plants in Malta. Diesel is sent and transshipped through blending plants in Lomé, in Togo. And what you typically have for off-spec petrol is that it's adulterated, and you need to cure it with other chemicals. And this was the reason why, a few months ago, when a test was done on samples of diesel that was collected at petrol stations randomly in Nigeria, it showed that one of the petrol stations, that is also linked to importing and transshipping off-spec petrol from Russia through Malta, actually had the sulfur level at 2,631 ppm. So you have a situation, for example, where for the other 75% or 600,000 metric tons of PMS consumed monthly in Nigeria, international traders are being owed. Now, there's what they call vendor program, supply financing contracts. In 2019, May 2019 and November 2019, NNPC went to Afrexim. They were able to finance about $2.25 billion US of loans through reserve-based lending to provide for this same vendor financing where traders are paid, and the supply of PMS in Nigeria doesn't stop. Now it has come again, and traders are owed billions of US dollars, and the traders are saying that if they are not paid in cash or they are not giving crude oil feedstock that equals what they are supposed to get due for T60. T60 means it takes 60 days for the transaction to be settled, of 60 days for the person who is who has the invoice payable to make the payment, or unless he'll be incurring interest on a daily basis. And that interest is calculated as LIBOR, 1.5 to 2% plus country risk premium. In my estimate, it's somewhere between 6.5 and 7%, which means Nigeria is paying anywhere around $1.3 million on $6.8 billion the NNPC is owing international traders, and on a daily basis has demurrage for not paying the T60 transaction when it's supposed to be paid. So what you simply see in reality on ground in Nigeria is a situation where if NNPC does not make good on this payment for the 75% that is controlled by the other international traders for supply to Nigeria, Nigeria is going to be out of petrol, and you're going to see the fuel queues continue around Nigeria. Now, the question becomes, why are we still importing petrol? Why are we importing?
Sorry, Calvin. Before you go there. Now, we do know that Dangote and the other local refiners had talked about international oil companies when it comes to the issue of crude. Are we referring to the same group of people?
No. So international traders are different from international oil companies. International traders are not lessees or licensees upstream that are producing or operators that are producing crude oil on a daily basis and are bound by the DCSO obligations as stated in sections 109 of the PIA. They are completely separate issues. Yeah. So now you have a situation, for example, where you have modular refineries, for example, that can do about 38,500 barrels of combined production on a daily basis. And when you put that 38,005, it can do about 2.9 million liters of PMS on a daily basis. Now, so the question becomes, now, modular refineries cannot actually refine PMS. Yeah, they can only refine naphtha, which is the base compound for refining PMS in primary refining process. So why have we had a history over the last 20 years of moving from oil processing agreement, OPA, where the government, PPMC, gave license to 13 offshore refineries to do crude oil swaps and trade crude oil and bring in PMS to Nigeria, to DSDP, direct sale, direct purchase, to what we have today, which is outside of OPA or DSDP. And why have we not had a situation where, okay, if the modular refineries can actually produce PMS by doing secondary refining and bringing in catalytic reforming units, CRU, to process naphtha into PMS, why have we not done backward integration? Okay, now we have a commercial size refinery that can more than satisfy Nigeria's daily demand. Nigeria consumes, in my estimate, about 35 million liters of PMS. That's the true curve, okay? And the refinery in Lagos can do up to 50 million liters of PMS. Why is Nigeria not supplying the refinery with the crude oil? Why is the refinery importing crude oil from Brazil, from the US? In 2009, America was importing crude oil from Nigeria. As a matter of fact, there was a time in 2009 when America was doing about $1 billion in imports on a daily basis. And Nigeria was one of the top 3 markets for purchasing crude oil. Obama came up with a charge to the Department of Energy in America and said that he doesn't want to keep importing crude oil from volatile countries in Africa and the Middle East. And they went to the hydraulic technology, they came up with fracking. And now, as a last count, America is producing about 13.4 million barrels of crude oil on a daily basis, ahead of Saudi Arabia and Russia, and even Brazil. So the question is, how did we go from a country that was exporting crude oil to the US to a country that its largest refinery is now importing crude oil from the US? It's an irony, So now we come to the DCSO obligations, the domestic crude oil supply obligations. Yeah, what does the law actually say? What does the PIA say about DCSO and about supplying crude oil to domestic refineries? The law says that NMDPRA, which is a regulator for refineries in Nigeria, and not just for Dangote refinery, for all the other modular refineries in Nigeria, for OPAC, for Kwale, for Aradel, for Walter Smith, the law says that NMDPRA is supposed to record a shortfall for all the refineries in Nigeria on a daily basis, a supply shortfall, and send that note to NUPRC. And on a daily basis, NUPRC is supposed to issue a request for quote, an RFQ, to the producers upstream, both the Independent Petroleum Producers Group, IPPG, and the IOCs, to provide that shortfall, lest they will not get export permits from Ministry of Trade and Investment to lift products out of Nigeria. That's what the law says. Okay. Now, people are bringing up issues like, there are stabilization clauses in the joint venture agreement signed. There are pre-export financing contracts with traders, which says that traders are supposed to provide financing for some independent producers. And when they produce, they're supposed to give crude oil feedstock back to the traders as payment for that financing provided. But you can't have contracts supersede what the Petroleum Industry Act of 2021 says, because the PIA is the Bible for the oil and gas sector in Nigeria. Upstream, midstream, and downstream. For we to have a situation where we stop this issue of 2 months we have supply, for 2 weeks we have fuel scarcity all around Nigeria, there's no petroleum equalization fund to ensure that there's uniformity of price across Nigeria. Some people in Lagos are buying for 568, some persons are buying for 620. In Southeast or in the Northeast, some people are buying for 1,000 naira per litre. We need to address the elephant in the room. And the elephant in the room is that local refineries, domestic refineries, and not just Dangote refinery, the modular refineries in Nigeria, they need crude oil feedstock. NNPC, as the custodian of the federal government's assets upstream, needs to get serious about increasing its daily output. It needs to get serious about working with NUPRC to comply with the domestic crude oil supply obligations, to supply the domestic refineries with the crude oil that they need to provide PMS to Nigerians.
All right,
in 2024, we should stop importing PMS.
Calvin, let me come in there, because I think, was it last week or so, actually Dangote did share a statement appreciating the NUPRC for giving them a certain number of cargoes, which was not up to what they want. And they also said that NUPRC has come to say that they cannot even meet up with the local obligation because of commitment. I know Nigeria has done a couple of, like you mentioned, the Afrexim Bank has done a couple of loans for crude. So they are not able to meet up with that. So I guess the question is, where do we go from here? We know what the PIA says. We know what the law says, that they're supposed to meet up with domestic obligations first. But now we also have debts that has been taken, which has to be paid with crude.
Okay, so now the question I have to ask you, Ini, is, does it make sense that NNPC wants to borrow another $2 billion, yeah, and one of the external asset managers to the Central Bank of Nigeria, that is a book runner on the transaction, is currently working on the transaction to tie a well to that $2 billion loan, yeah, that will be paying about 35,000 barrels per day? Does it make sense for you to borrow $2 billion, not to invest in capex, to increase your production upstream and supply and fulfill the terms of the domestic crude oil supply obligations as stated in the production guidelines under the PIA, and instead you want to use that $2 billion loan to draw down on the debt you're owing traders? Does it make sense to borrow money to service an already existing loan? Does it make sense? This is the question we have to ask. If it doesn't make sense, how do we address the issues upstream to increase production? And how do we ensure that there are no foul play in how crude oil is allocated under domestic crude oil supply obligations? Dangote has, for September, has only been allocated 6 of 15 cargoes. So you have anywhere around maybe 6 million barrels out of 15 million barrels that's supposed to be allocated. If a commercial refinery that size needs about anywhere around 450 to 520,000 barrels of crude oil to hit 70% capacity utilization, which is where it needs to break grounds or break even. Okay, so if you're not supplying him with the crude oil feedstock that he needs, you've not even done 50% of it, he has to, meet up with the balance by importing crude oil feedstock from other parts of the world that Nigeria was exporting crude oil to. And when you do that, you have a situation where you saw the auction that CBN did, the retail Dutch auction. Dangote bidded for about $138 million, if I'm not mistaken, right? Because he needs dollars to be able to import crude oil feedstock. So what you have inadvertently is that when you don't supply crude oil to the domestic refineries in Nigeria, they end up going to the FX markets in Nigeria to bid for dollars, put more pressure on the currency, which increases inflation, and then compels the Monetary Policy Committee of the Central Bank to raise the MPR. So it's a vicious cycle. And this is the reason why I've said that, listen, it's time for NNPC structure to change. We need to obey Section 65 of the PIA that says that NNPC needs to migrate from unregistered joint ventures and production sharing contracts to incorporated joint venture models with IPPG members and the IOCs upstream. There needs to be governance and accountability in the way joint venture agreements are structured upstream. There needs to be governance and accountability in the way financing is raised for what is called carried cost and carried interest that goes into what you call your joint venture cash calls, which NNPC has struggled to pay for several years. These are the issues upstream, and these are the reasons why the companies who produce upstream are not willing to invest monies into deep offshore wells, shallow wells, and onshore wells to increase production in Nigeria. The president says that he has a target to raise output to 4 million barrels over the next few years. But the question is, what is he doing to obey the PIA to attract institutional capital into the oil and gas sector in Nigeria, upstream? And this is why I'm always shouting and saying that, listen, we need to change the way we do things with NNPC. The way we do things has not worked out so far. This morning I saw a statement that says that NNPC released a statement to deny that you've not been remitting money since January to the Federation account, which in my opinion is completely not true, because actually they've not been remitting money to NUPRC for royalties to the Federation account since January of this year. Okay, and now the government has confirmed that they've been asked to defray the cost of subsidy payments in claims with the monies that have not been remitted to the Federation account from NNPCL. No, we need to move from a situation where NNPC gets its matching orders from the government to a situation where we can amend the act that establishes Ministry of Petroleum Incorporated, Ministry of Finance Incorporated, 50-50% as stated in PIA, and move it from the state-owned enterprise it is now into an asset manager as a beneficial owner that will take it to the markets. NNPC needs to be driven by a market-based investors that will determine its management team, that will determine its board. And the issues around accountability is the reason why, unless the government decides to let go and allow the markets to run, you can see NLNG. NLNG works. NLNG is one of the best-run companies in Nigeria. NLNG works because the Nigerian government has minority stake, 49%. IOCs have 51%. And the Nigerian government doesn't have a say in how the operations are run. The operations are run based on global best practice. It runs because the Nigerian government does not dictate to the management of NLNG how the company works. That's what NNPC needs.
All right, so Kelvin,
we take the radical step to transform how NNPC is run, we will not increase production upstream. We will not be able to meet our domestic crude oil supply obligations. We'll continue doing crude oil swaps that is very deadly for allocation of DCSO obligations.
So with all of this picture you have painted, it seems the pronouncement of crude for Naira may not even make any difference.
So the pronouncement for crude for Naira, what it does basically is that it will relieve the pressure of the refineries midstream that need crude oil feedstock to refine and produce on a daily basis, from going to the Arudas, the retail auction or wholesale auction, to bid for dollars or source for dollars to be able to buy the US dollars. Now, what typically should happen, and this is what I have proposed, that the government should consider, is that, listen, if you're doing DCSO obligations and you're allocating crude oil feedstock to the refineries in Nigeria, and you're saying that there's an opportunity cost of not getting US dollars for CBN to do its balance of payment obligations, what you can do is sit down with the FIRS and CBN officials and tell the domestic refineries that, listen, if we allocate crude oil to you in Naira, as the PIA says, we will require that for whatever product you export as derivatives, a major percentage of it has to come back to Nigeria, to the originating bank as net export proceeds. And I dare say that the value you derive from exporting refined derivatives is actually higher than the value you get from selling crude oil feedstock. All crude oil produced around the world on a daily basis, about 88 million barrels per day. OPEC is about 32 million barrels per day for its members. Actually goes to refineries in Southeast Asia, in Europe, in America, in the Middle East. Crude oil is meant for refining. So if we're producing crude oil and the refineries in Nigeria are not getting feedstock, it's an irony. And I'll tell you this, and I'll tell you this. In 2024, early this year, the European Union, and especially the governments of the Netherlands and Belgium, banned blending of off-spec adulterated petrol in most of Western Europe. So you have a country, for example, in the Mediterranean, Malta, that has 5 major terminals for transshipment, for bunkering, and for blending. Okay? The Maltese government has not come up to speed with the European Union. And you've had a hub where traders in Nigeria, violate the terms of quality specification according to American Society of Testing and Materials that says that every product you bring in Nigeria must meet up with 50 ppm parts per million for sulfur. Octane level should not be less than 70, 75. Dangote is proposing to produce between 93 and 95 Euro V, which is way, way higher than what they are doing. His sulfur level is down below 30 parts per million for diesel, And you have a situation where off-spec adulterated products are transshipped from Russia through Malta and they are sent to Nigeria. On paper, the regulator says they meet quality assessment, but when the test is actually done based on international best practice for gasoline testing, products turn out to actually be so much off and hazardous to Nigerians. So we need to ask ourselves the question, do we continue to import substandard adulterated products into Nigeria, or do we supply the domestic refineries in Nigeria? And not just Dangote, because Dangote refinery is not the only refinery in Nigeria. As a matter of fact, the Bua Group is proposing to build a refinery in Akwa Ibom. Okay? It's going to come out in a few years' time. When it comes out, there is going to be the issue of, competition in the markets. The government is trying to reactivate the Port Harcourt refineries. So it's not just Dangote. When the Port Harcourt refinery comes, you're also going to have the government-owned refinery in Port Harcourt that's about 150,000 barrels per day, and that can do anywhere around 12 to 15 million liters of PMS on a daily basis. So do we continue this strategy that relies on OPEC, where we export 100% of what we get, less all the domestic crude oil supply obligations, or do we do a backward integration in our strategy and increase the allocation for DCSO obligations so that there's enough feedstock to meet up what they call the national oil supply curve, and we can, meet up with terms of our our energy security? Because if you don't have crude oil feedstock to provide comparative advantage to domestic refiners, you will not be able to supply Nigerians with the PMS, diesel, Jet A1, and all the other products that they need.
All right, Kelvin, thank you so much. A whole very soul-searching questions right there. The issue of quality, obviously, the need for restructuring of the NNPC, as you have said, and the end of the day, energy security in Nigeria. But thank you so much for your time, Kelvin Emmanuel, for sharing your thoughts with us this morning.
Thank you for having me.